prepare journal entries again, right? To record the following transactions in Menifee City's general ledger and make adjusting entries if needed. So, they levied property taxes of $12 million for 2006. The taxes were levied on January 1st. Menifee expects $80,000 to be uncollectible. 3/4 of taxes receivable are expected to be collected within the 2% discount period. Right? So there's multiple pieces here, but you've done this before. Right? You did this last week. You did this last week. Okay? Now they're adding a couple complexities. Okay? So you have the $12 million that's receivable. Right? Then you have the allowance for uncollectible current taxes. Right? You have an allowance for discount on taxes, which you could probably calculate a couple different ways. Right? This is how I did it. I took the $12 million and I multiplied it by 0.75, and then I multiplied that by 0.02. Okay? To give me the 2% discount. Questions about that?
Say that one more time. How you got that?
I'm just wondering where those are.
You got these pieces?
Yeah, I got those.
Okay. So what I did, it says in the problem that 3/4 of the taxes receivable are expected to be collected within the 2% discount period, right?
Okay.
So I'm expecting that 3/4 of this amount are going to get a 2% discount. So I'm going to set up an allowance for that. Okay? Because I'm expecting that to happen. So in order to get that number, in order to know what that number is, I take the 12 million and I multiply it by 0.75 to get 3/4 of it. Right? So 900,000.
Yeah.
Or
9 million.
9 million. Then I multiply that 9 million by 0.02, the 2%.
So the 2% discount.
Okay.
Rate. Okay.
Right. Does that make sense?
Yeah.
Yes, sir.
So is that deferred revenues account carried as kind of like a liability until it's recognized?
Yes, correct. Yeah. So your deferred revenues is often going to be a deferred inflows piece, right?
Yeah.
What your book talks about, and your book makes some distinctions between deferred revenues and unearned revenues, and what's a deferred inflow and not. But I don't think they've asked you to do anything with that piece specifically. They may later on. I don't remember. Okay. So, questions about this? Questions about how to calculate this?
Yes, exactly.
Okay, so it says another $1 million of taxes receivable should be collected before year end, but after the discount period.
So you have to take away the first $9 million that you already
Right.
accounted for.
So I took out. So here's my 12 million to start.
Minus
Whether
the
or not you can see this or not. 12 million minus the 3/4, which is the 9 million, minus the 1 million,
Okay, for the uncollectible.
right? Minus the 80,000
That's the uncollectible.
that I took out for that I put here, right,
Yeah.
as an allowance.
Well, you
And
divide
then I'm
it.
going to divide that by 10 and multiply it by 8.
The 10 for the last 10 months of the year?
Uh-huh.
For the final
For the first 10
months.
months of the year.
Okay.
The balance of the collectible taxes is expected to be collected at a uniform rate over the first 10 months of 2007.
Okay.
Does that make sense? So in order to get my you could do it differently. You can do the math differently.
Yeah.
But in order for me to get a uniform rate, I took my new amount, right, my new collectible amount, which is, what, 3 million, 2 million, 1 million, 920,000.
Yeah.
Right?
1,920.
So 1,920,000 divided by 10 times 8.
What does the 8 come
Well, yeah. What's the 8?
Well, let's look back. Where does the 8 come from? Any ideas?
Can you increase that formula, please?
The formula, I don't think I can make the formula bigger.
No.
I don't think I can make the formula any bigger.
you
I can
repeat
write
it?
it.
Can you repeat it? It's 12 million.
Yeah, it's 12 million minus the 9 million, which is the 3/4, right? That 3/4, minus 80,000, which is the amount that I put as uncollectible, right? Minus the million, the other million in the problem that says will be collected after the discount period. Okay? Because what I'm trying to get to is how much is collectible. How much do I think is going to be collectible? And that's 1,920,000. Right? That's what that number comes to. Then I'm dividing that by 10 for the first 10 months of the year. And I'm multiplying it by 8. Why am I multiplying it by 8? What did we say about how long you can recognize revenue in the current in the next year? Right. And 60 days is 2 months.
Yeah, it's 6 months of that.
So the only portion that's going to be deferred are 8 months, right? The first 2 months go in here in my revenue. So I can record that as revenue. The next 8 months go in my deferred revenue. Does that make sense?
No.
If you didn't get it the first time you took a run at it, that's okay. Does this make sense?
That does, but
It
can
does
you
now.
can you walk through the dates again? Why it's because
Yeah, I can.
I mean, I'm sure it'll make sense if we walk
Sure,
through the dates
sure,
again, but
sure.
it's just not the way I was reading it.
Yeah. Okay. So they levied the property taxes for 2006 on January 1st, right? So we got the 12 million. We're good with the 12 million.
Yes.
Right? Yes.
Yes.
Okay. We're good with the 80,000 allowance, right?
Okay, so if I stop you here and say
Yeah.
because this is 2006,
Yes.
and the first 10 months of 2007 is when they plan to collect that even amount,
Mm-hmm.
but we subtract off the first 2 months
Of
because
2000.
they're the 60 days.
Right.
Okay,
Yes.
I got it. I don't know.
Because the first
That
60
makes
days
more
of the
sense.
next fiscal year, I can count in the current fiscal year. Right? I can count it as revenue in the current fiscal year.
So even though we're only, even though they're accounting for 10 months, if it were for
That's
some
right.
reason to come in the first 60
'Cause-
days.
and the key to that is they say they expect it to come in uniform payments. Right? If they didn't say that, there's no way you would know how much you're going to collect in the first 60 days.
But
And so
because
the last part, that 10 million is basically 12 million minus the net last three, or the 3 on the credit side, right?
for the revenues, is that what you're looking
Wait,
at,
say
Chris?
that again?
Oh, I'm just saying that 10 million number comes from taking 12 million and subtracting the first 3 there on the credit side, is that right?
Subtracting the
yeah.
one
Yes,
five
correct.
180. Okay.
Yes, correct. Correct. You can get, I mean, if you did this number first, you could get there, but yeah, that's how I did it.
Okay.
I calculated the discount amount, and then I just said, okay, well, I know the rest is revenue, right? You could calculate the revenue, though, too. You can go out of that.
Okay, just do a solve for X, basically.
Yeah, right. Okay.
We don't solve for X in accounting.
Questions? I want to make sure we get this. This makes sense at least. Okay.
Readjust.
There's a lot of pieces,
Readjust.
right?
Yes.
There's a lot of pieces.
This does not
So
look like
as you
that.
walk through, you have to say, okay, what's going on here? And make sure you account for every piece. Okay? Any more questions on one? Do we need to walk through that equation one more time?
I've got it, I don't know.
No.
I finally got it, I should say.
I
Yeah.
got it on there like you have, but it's still not.
Maybe you don't have the proper.
Still not calculating out right in Excel?
The zeros.
Do you have the parentheses?
It's the
Yep.
zeros that are the problem.
So you have to have 2 sets of parentheses as well.
Oh,
Right.
2 sets of parentheses?
You have to have parentheses around your subtraction, because otherwise order of operation kicks in,
Exactly.
and division and multiplication always go first.
And then, okay, so then you have another parentheses, what, right before you do the.
There's two at the beginning. One after the
Yeah,
one
so
after
you have
the
2
million.
at the beginning, you have your subtraction equation,
Yeah.
right? Then you have 1. Then you have divided by 10, right?
Okay.
Then you have 1. Then you have multiplied by 8,
That would be it, thank you.
okay?
Right, because it would divide by 80 if you didn't do that. Minus 9, 1, 2, 3, 1, 2, 3.
When you're doing formulas, when you're doing functions in Excel,
Must remember.
I would always double check them. Find a way to double check them. Because it's really annoying, speaking from personal experience, to build a huge spreadsheet and then find out you have a formula wrong. Because it's not easy to find where the formula error is.
No, it was awful.
Okay.
Okay.
Questions? Yes, sir.
There's one, that's kind of a stupid question, I'm a little confused on it.
No.
So to be recognized as current revenue,
Yes.
I guess I was a little bit confused on the current period or the 60-day maximum. So
Okay.
what it's saying is if you levy the tax on the first day of 2006 or whatever.
Right.
It's current if you expect to receive it anytime that entire year.
That year.
Or through the end of February of the
Or
following
through the
year.
2 months of the next fiscal year. Right.
So anytime in your fiscal year plus 60 days.
Plus 68. That's correct. You got it.
Okay.
Because current in this context means the same thing as current in financial accounting, right? Within 1 year. So whenever you see current, you can think 1 year. Okay? And then here what they're doing is they're adding 60 days to that. They're saying if it is available, right? If it's collected and it is legally usable, you can record it as revenue. Okay? Within the first 60 days. So you actually have 14 months in essence, right?
Because, yeah, okay.
Okay?
The 2 extra
To
months.
count that revenue. All right. Good with number 1?
Yes.
Okay, number 2. How do we do on number 2? Menifee collected $9.1 million before discounts of its taxes receivable prior to the end of the discount period. The balance of the taxes receivable are past due. So, they had thought, right, that they were going to collect $180,000. They didn't.
Yeah.
Or use that much in discounts. They didn't. They only collected they only collected 9.1, right, of their receivable taxes. Does that make sense? So that's our taxes receivable, that's our credit. Now we just have to figure out what makes up that credit, right? We know we had an allowance here
From up
of 180,000. Okay? We also know that because we had that allowance of 180,000, that increased, right, our revenues. So now we have to reduce our revenues a little bit. Does that make sense? Okay, so the total amount that's collected in the discount period is 9.1, right?
Mm-hmm.
So if you do, so what did we say? 9.1, if that's subject to a 2% discount, right?
Then
What does that come to? You got it?
182,000.
Okay? So if it comes to 182,000, that means I've spent more than my allowance,
Oh.
right?
So you have to give back. So it's the.
So I have to
2,000.
take back some of this revenue that I gave this number, okay, if I had used the same amount of discount that I thought I was going to, this number would be 182 and this number would be $2,000 less than it currently is. So, when that actually came in, I have to adjust my revenue to account for that. Does that make sense? It's a small piece. Don't get too worried if you didn't get it. Okay?
I got it, but I made the allowance, the 182, because that's what I calculated out to be, and then
Right.
I took the revenue down by 2,000. I mean, I have the numbers, but why wouldn't you? Does it have to wipe out the original account, the allowance? Does it have to offset? In number 1, you have the allowance.
So, like, could you have a negative allowance?
Well, that's all.
Yes. Does it have to zero out? That's what I'm saying. Does it have to?
Yeah, it should. It should, because you should be reducing your revenue at that point. Right? An allowance, remember back to financial accounting. What does an allowance do? An allowance kind of sets aside stuff and it lets you record, right? Record an expense or a revenue so that later you don't have to adjust the expense or revenue, right?
Mhm.
Think about writing off AR and stuff like that. So in this case, I don't want my allowance to go negative. So I'm just going to wipe this account out and then I'm going to record a negative revenue. Because you'd have to do the same thing, right?
And I guess that's what I thought of, because when I think of allowance for like say writing off bad debt,
Uh-huh.
you have an allowance account and
Right.
saying there's 50 grand in there, but you only write off 30,
Sure.
and that's it. So you
Sure.
have to close it out at the end of the year
Right.
and balance it down. And so I guess that same concept is, well, the actual discount, if we collected 91 or 9.1, was 182.
Sure. I think part of the conversation, so there's two pieces. I think part of the conversation or difference is how do you record this? You could record it in 2 steps. I just netted it out.
Okay.
Right?
Which
That's
I
that's
did.
one piece. The second piece is with your allowance for doubtful accounts example. So if you have 50,000 in allowance and you write off 52, what do you do with that additional 2? You write it to expense, right?
Sure.
You know what I'm saying?
Why not?
Well, one way or another, you have to write it to expense. Because when you set up your allowance, you record expense. So whether you do it like this in a net fashion, or you say this is 182, and then I do another entry that records an increase to my allowance and a decrease to my revenue, either way, right? It's
Is
6 of one,
correct.
half dozen the other.
Got it.
Yeah.
Okay.
Yeah,
That
you can
makes-
always do more entries. I mean, that's fine with me.
I don't know why I would want
I mean,
to.
there were some entries that I saw in the presentations where the answers break them out differently, right? But as long as it nets the same, I don't care. I don't care how you do it. Does that make sense? So if there's, for instance, if you have 2 entries that both involve accounts receivable, as long as they net to the right amount, that's fine. Just realize you could make them into a compound entry, right, and net them. Does that make sense? Yes, sir.
I don't know if this correlates with what Jackie was asking, but, so what you're saying is you could actually just, debit allowance for discount on taxes 182 and assume that at the end of the year, a closing entry would be made to zero that account out.
Sure, you can do that. But at some point, whether you do it at the end of the year, whether you do it now, whether you do it this way or you do it in 2 separate entries, you're going to have to debit your revenue. You're going to have to lower your revenue. Because initially your revenue should have been lower. Does that make sense?
Yeah, if this happened multiple times throughout the year,
Yeah.
it seems like it would be easier to just do the revenue adjustment at year end.
Assuming that you're going to go back and remember all of those pieces. In the real world, doing real accounting, the only hesitation I would have with that is if you get to the end and for some reason you've forgotten one of your pieces. Let's say you do this in January, you're doing your year-end entries in December, and you don't have a good way of tracking. I would much rather you take a shot like this, get the amount wrong, then you're going to have an amount at the end of the year that's sticking out, right? Rather than having to remember to come back and fix your allowance. You can do it, you don't have to do it that way. I'm just saying, whenever you do it, you're going to have to adjust your revenue down.
So the allowance for discount on taxes wouldn't be considered a temporary account that you need to close out? Is that what you're saying?
No, what's an allowance account?
It's just an asset offset?
Right. Right. Okay?
Alright.
Okay? We good? Okay, moving on. So the second part of 2, you have to move the accounts, right, from the current to the delinquent. We've done this before as well. You remember this from last week? Yes, no, maybe?
Vaguely.
Yes, ma'am.
Where's the 2.9 come from?
Where does the 2.9 come
Remainder
from?
after you collected 9.1. Because your original amount was 12 million.
Okay.
Right, I originally set up my receivable at 12
I
million.
understand that.
Here's the 9.1 I collected, so I have 2.9 left that I'm moving from taxes receivable current to taxes receivable delinquent. And I'm moving the allowance from current to delinquent as well. Does that make sense? We've done this before. I'm not saying that because I expect that you're going to get it all right. I'm saying that because I want you to know that there are times you're going to see the same things, and you can go back and look at what you've done, right? Or go back. I sent you the answers from week 1. This is in there, right? I'm not saying memorize them all, but there might be times you go back and you say, okay, well, how did we do this before? Or this week's stuff, there may be times you come back to this week and say, how did we do this? Right? That may be helpful. Okay? Okay, so does this entry make sense, the second part of number 2?
Yeah.
And you know to do this, why? What does the problem say that alerts you to do this?
Because it says the rest are past due.
It says the rest are past due. Right? So they're now delinquent rather than current. Okay? Number 3, Menifee wrote off taxes receivable of $30,000 as uncollectible. Pretty straightforward, I think. Right? You set up that allowance, now you're going to write some off. Okay, so it doesn't hit expenditures, it hits, right? It just hits your receivable and your allowance. And then number 4, Menifee collected another $900,000 of its taxes receivable after the discount period, but before year end. So again, cash and taxes receivable delinquent. Okay, those are straightforward, I think.
Are they really delinquent, or are they just past the discount period?
Well, it depends on how you refer,
depends
how
how you
you
define it.
define delinquent,
Okay.
right? Depending on
Every company's going to be different.
every company's going to be different.
Yeah.
Federal programs are going to be different.
So for this one, what they're really saying is that they've collected money after the discount period. In
Well,
number
it's-
4.
Yeah, yes. In number 4, the reason you're doing taxes receivable delinquent here is because you don't have any more. You don't have taxes receivable current anymore,
Yeah.
right? Because you moved them all.
Yeah.
And the reason you did that is because the problem said the rest of them are past due.
Okay.
So there was evidently
So that's the
some.
only reason.
Yeah, there was evidently some past due period in there.
Okay.
Yeah, you wouldn't necessarily say these were delinquent unless the problem had told you to move them to delinquent.
I got you.
Yeah.
I mean, so I mean, it's just the language.
Yeah, it's not. There's no magic date to
Okay.
say if they're 90 days past due, they're delinquent.
Well, it didn't even specify whether they were out 90 days already. So
Yeah,
I
sure,
mean, they could have been.
sure.
Could have, whatever.
Okay. Question? Any other questions on 5-7?